Hello everyone, Larry Lavrenchich for Ichimoku.co with the daily analysis for the S&P 500 for the trading day ending Monday, January 27th, 2014. Well, a continuation of the trend to the downside today, and that follows a very large black body candle that closed the week last week. A candle where the sellers had very strong control and took out the important round number support around the 1800 level and took it out in a very decisive manner. Today we've seen some decent follow through. We've seen the size of the black body reduce, which suggests that some momentum from the sellers has dried up to a degree, but really following such an extreme day, it's little wonder that we've had this type of trading day. We have still had the sellers close with control, a moderate level of control as opposed to very strong control, and that's because of this shadow on the bottom. We see price rejection coming around the 1775 level, and in the recent past that was very strong resistance on two occasions, and then on a couple of occasions in the last month towards the end of the last year we saw that area act as support, and that's what we're seeing again, seeing buying coming in around that area, and that may be significant to this market. Now the other important factor here is that from the major high at 1850, this market has not changed trend to the upside since that level around the 15th of January. And we've had some inside days and outside days, but technically no change of trend. And that really did say something about weakness of the buyers in the market around that level. There was a feeble attempt on the spinning top type candle to test that level. The market initially finding support around the Tenkan-sen. The Tenkan-sen became crucial to this market and was taken out. And then the Kijun-sen was taken out in a very bearish manner for the previous day's trading to today. And this gives us a bearish market in the medium and fast term timeframes by trading down below the Tenkan-sen and the Kijun-sen. In terms of the Fibonacci extension, the market is at a fairly important level at the moment, and we're examining the relationship of this current first time frame downtrend to the previous time the market was trending down, and here we've seen the market rejected from below the 261.8% level, and that suggests that there is a possibility of the trend changing back to the upside. So let's be on the lookout for a higher high and a higher low. With this reduction in the size of the black body, that is a possibility, so it's telling us that the sellers aren't as strong, and obviously they're not as strong as they were for that previous candle, but it's very hard for such extreme price action to be maintained, so we do need to look at that in its context. But the rejection from below the 261.8% is something that we really do need to take note of, so we are looking for a potential higher high and higher low. In terms of the Fibonacci retracement of the prior uptrend, we're in an expansive mode of that. We traded through the 100% level for the prior day's trading, and we are now in between the 161.8% and the 261.8%. This suggests that if the trend does continue down, we have a target there around 1758 at the 261.8%. So not confirming what we're seeing with the other Fibonacci technique. Now obviously a change of sentiment in the long-term time frame, and it's been some time since we've seen the market trading within the cloud, and that was back in late August, early September this year, and we've had the market trading above the cloud and finding support around the cloud for all of that time. So a close within the cloud may be significant, may be suggesting that there is a change of sentiment in that long-term time frame in this market. The cloud is quite thick here where the market's trading at the moment. But as we move into the next week or two, the cloud actually moves higher, and we have a very much thinner amount of cloud, and it may be easier for the market to break out down through the cloud, giving us a bearish market in that long-term time frame. So some crucial trading coming up over the next week or two. Now if the market does trade down through to the bottom of the cloud here where it's trading at the moment, we do have a previous window that was open that's never been tested before by the market, and that may offer itself as strong support for this market, as will the area down around the 1729 level. I'm not suggesting that we will trade down there soon. There's a possibility. We have a few other levels of support before we trade down there, but it is a level to look to if we do see extreme bearishness in this market. But at the moment we are interacting with an important level of previous resistance and then support. There is a possibility of the market bouncing back. I suggest that if we do see that change of trend and the market trading back outside of the cloud, then the round number 1800 may hold as resistance for this market again, so something for us to keep an eye on.